At its core, blended finance intends to mobilize private sector investment into transactions that support the achievement of the SDGs in emerging markets. As such, every blended finance transaction must include the participation of at least one private sector investor. Commercial investors make up 29% of commitments into blended finance transactions, representing over $52 billion in private sector investment. As the main targets of concessional and catalytic capital, commercial investors tend to occupy the lowest risk position in the capital stack, investing through senior debt about 40% of the time. The private sector investor segment isn't homogeneous. Rather, it includes several investor classes, including commercial banks, private equity and venture capital firms, and institutional investors. Commercial banks are the most active among this investor group, comprising 42% of all private sector investments. Given their immense capacity to invest in blended finance transactions, the mobilization of institutional investors is essential to scaling the overall market and bridging the SDG financing gap. But there are many challenges to crowding in this investor class. Most ODA-eligible countries have non-investment grade credit ratings, which are outside the investment mandates of institutional investors. Also, these investors have an appetite for larger investment sizes, which blended finance deals often cannot meet. For example, the median size of transactions featuring pension funds is $162 million versus only $90 million for the overall market. To better attract institutional investors, donors must make concessional capital more available to improve risk-adjusted returns, increase deal credit quality, and grow deal sizes. Commercial investors must better align their ESG commitments to the SDGs and use this as an impetus to direct more capital through blended finance transactions. Doing so will require a greater commitment from commercial investors to understand blended finance concepts, the various applications of risk-bearing capital, and integrate this knowledge into their investments.